Hey guys, this is Randy. I'll probably just keep this video brief and put it in the trading room. It's really more active trader stuff. This is the earlier today posted these flags. Somebody asked about them, and I said, yeah, I see a flag on bear flag. I'm sorry, bull flag on IWM, bull flag patterns. Look it up if you're not familiar with the term. That's you have a sharp move up. That's called the flagpole, an impulsive nearly unidirectional move up, followed by a period of consolidation, which is one criteria you want to look for, is high volume on the flagpole and declining volume on the flag, and then a breakout. And to get the measured target, you simply measure the distance to the flag. What I find the easiest way to do that is take a trend line on your chart, match the flagpole, copy that trend line. Almost any charting program will allow you to create a parallel trend line, and then just drag it and add it. And that gives you the measured target. You actually wrong. You take that to the lowest point of the flag, so not the top. So there it is. So the bottom of the flag is right there. That should be a line tool. And the top is there. You'd add it to the bottom, at the lowest point of the flag before it breaks out. So we'll say right there. And then what I do, that's a measured target, but then I'll look and see, okay, where are the nearest resistance levels nearby? And I see consolidation period right here on IWM. Again, we're on a 10-minute chart here. I showed it on a 5-minute chart earlier, but same difference almost. There's a consolidation pattern, the bottom of which is about right about 149, and then the top at about 150.75. And so therefore what I would do is say, okay, well, that's the measured target for the pattern, but that's a significant resistance level, so that would be my target right there. Not that I'm not going to get greedy and go for the higher target. That would be. However, what I'm sensing is this thing is either going to pop. I'd almost be surprised if they didn't pop it as close as we are, but I'll tell you, I'm favoring a false breakout, a pop-up. You see a surge right there as all the buy orders are hit. Buy stop orders. You can have a stop order to buy a stock, not just to close a position. So like if let's say I was at work and had to walk into a meeting and I'm like, I want to get this breakout, but I don't want to jump the gun. Instead of like a stop loss order, which is below, you put a buy stop right there, and that means if the price is hit, then it'll buy you into the position, give you a long position. And you also would have bears or shorts would have probably sell stops above that level right there. And then of course there's two things, and I like when I see a chart pattern where you have not just one but two levels. So let's say you didn't see, you weren't familiar, or just missed that flag. Well, you might pick up on, and I'm sure a lot of traders do, there's a clean downtrend line too, you can see there. And so they both come in at the same exact level, so a pop above one takes you above the other. So one set of eyes are watching this, the other set of eyes are watching that. So that's that. So a pop above there now normally would be a buy signal, and it may prove to be. So what I'm going to do is I'm still long the small caps in NASDAQ, NQ, and RTY, and I'll just let them pop it, and then I'll just set a stop and reverse. So a stop on the longs, and also if it fails, I may set a separate order. I may have a single order that takes me out of the longs and puts me into shorts if that fails, or I'll just trail up a stop, get out of the longs, let it run. In other words, it could run, so and I'll manually ratchet my stops up versus setting a trailing stop. Either one, almost the same difference. Manually just means I'll every time as we keep going up, I'll set a stop under. I like to do manual ratcheting up my stops, because that way I can see reaction points and things that form along the way versus just a trailing stop, which is automatically adjusted up. So you get these little reactions, and you can set your stops below there. So that's it. So I have to say, I'm can go either way, but I'm slightly leaning towards this stop pop scenario. You come up, false breakout, and then a fade in the final part of trading. Now there's that plus this level here. Somebody asked in the trading room today, they posted a chart of the futures, and you can see it here real clearly. I've added the line since. They said, Randy, what do you make of this chart? They had a resistance line right there at about 7,600, and you can see it's certainly a level. In fact, I can go back here, there's a reaction high there, reactions all the way here. So I didn't have it on my chart before, but it's certainly worth noting. I know this kind of looks like a head and shoulders, and it could prove to be a complex head and shoulders. You have two right shoulders and two left shoulders. That's called a complex head and shoulders pattern. I'm not a big fan of those on the intraday time frames. I know a lot of traders look at them, and therefore, because of that, if enough traders look at it and trade it, it then becomes that. But historically, those patterns were, in the original textbooks I read. Maybe I'm getting a little too old. They were to be formed on daily and weekly charts, spanning weeks or even months. They're also topping patterns that come at the top, an extended uptrend. They're not continuation patterns. This would be a continuation pattern, in other words, in this short-term time frame. You had to move down, now move up, and you'd be consolidating. And actually, it could go either way. Let's say, in other words, it's in the middle of a range. Break to the downside. Of course, if it's a head and shoulders or a complex head and shoulders, you have the neckline there. I'm probably spending too much time on it because, again, I don't put much emphasis on it being that, but that would be, neckline around 75.55, or you could use these bottom of those two shoulders. But either way, here's what I'm more focused on: 7,600. We stopped to the button today. That line might be a little high. You can pull it around. There it is, 7,600, and we've been tapping up on it so far, unable to get through it. And so, we're either going to fail here. So far, we failed all day, and that would be nothing else to say to that. A failure at resistance, and then head on down, and maybe quite more. Sooner or later, we're going to break from this range. There's only 2 trading days left in the month. 2 trading days and 46 minutes as I do this video. So, maybe we. Happens before the month is over, or we have Monday as a holiday. So if we don't do it by the end of this week, then that's going to carry us over till next month. All right, and here's that flag. It's getting a little bit stretched. I like to see nice symmetry. It doesn't have to be perfect, but so far, the size of the flag relative to the flagpole, I get that question a lot. If you had a flag that looked like this with this same flagpole, but price action was like this, that's too big. Look up the patterns online. You'll see flags, or it could be a pennant. At this point, it's more of a flag type pattern. That's it. And again, so far the flag is it's downtrend line, I should say, that's really acting as a resistance here. And so the flag may continue to stretch out, get a little bit long, but still an important downtrend. And if you look at it this way too, if we are rejected, if we fail to break out, there's still the potential that IWM comes down like this and then forms a falling wedge pattern. It's a little too early in the pattern right now to call it a falling wedge, but let's say a rejection here. Even if we get that pop that I think we're going to get, I mean, that's just too much. It's too tempting for the market makers. Powers that be, those running the algos. It would be hard to imagine they're not going to pop this just to very least burn the stops. And it doesn't mean we have to reverse. Like I said, if it keeps going, great. That's a breakout, and it didn't fail. Only fails when it fails. So that's why I'm open to anything. But one thing or another is going to happen here. We've been consolidating all day, building energy in this little spring right here, and so we're either going to pop it one way that with NQ at resistance too. I'm sure it'll be an impulsive move if we can just move up slightly above where we've stalled out so far today. And I was hoping it would happen during this video, so if it doesn't soon, I just wanted to continue what I was saying here, is that whether we fake breakout or not, we could move down within here, and that's something to watch. Falling wedge pattern that then could break out later at lower levels. And then let's look at QQQ before we wrap this up, because that's I know a lot of you guys don't trade NQ. So here's QQQ. Let's take it down. That's a 1 minute I went to. Well, you can see that 1 minute chart. It was today's highs on NQ was at 7,600 level, so that comparable level is 185.25, and that was today's high. So you can see they just keep failing at it. This is today's price action. If you wonder what we're looking at, a 1 minute chart, you can see the day break right here. That yellow line right here is yesterday's close. There's the gap down today. They bought up the gap down, and so far that's 7,600. Multiple failures there. And so if they pop it, it's going to probably look like this. Big green bar through there as all the stops are hit on shorts, and then longs jump in, take the breakout. And like I said, it wouldn't surprise me to see that breakout get sold into at some point during the day. But who knows, and that's why you can, if you're long or if you take it, set a stop somewhere you know, you don't want it too tight. You're going to get shaken out in the noise. When I say too tight, you can just see, you know, this is intraday noise. There's always going to be these back and forth. So if you're using a stop on QQQ of a, you know, 5 cents, 10 cents, you might as well not trade because, you know, they're going to shake you out in the noise. All right, let me wrap it up here because so far we failed to do it. And obviously a failure at resistance, you know, and then you start to see impulsive selling, that's pretty bearish. It just means the market could not get through that resistance level. So we'll wrap it up here and I'll get it out to you guys and we'll see what happens.